Good morning. We're a little early this week, a little bit earlier than we typically are on Fridays. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, or good morning. Good morning, Scott. I have not had enough coffee.
Good morning, Megan. It's good to be on.
Nice to see you again this week. All right, as we get things started, we're going to talk markets. We're going to talk some reports that have been going on and some other news of the week this week. But as we talk this morning, all of these prices and markets are through about 9 o'clock this morning, 10 o'clock this morning. So let's recap what's happened so far this week in the markets.
Yeah, if we start on the cattle side, and cash cattle through Thursday were almost $2 higher. We look at the feeder cattle markets for this week. They were anywhere from $1 to $4 higher. Again, futures contracts through early morning on Friday. December live cattle futures contracts were down 65 cents this week, and the November feeder cattle futures contract was down about 50 cents. Choice box beef price $1.25 higher this week, really led by some pretty strong rib prices in that choice box beef price. On the hog side of the equation, cash barrel and gut prices through Thursday were $2.50 higher. The December lean hog futures contract down about 85 cents through early morning here this morning. The pork cutout value has gained about $3 this week. And interestingly, where we normally talk about that pork cutout value being led by belly prices, the strength this week came in things like loins and butts and picnics and ribs. So a little bit of different pull in terms of that pork cutout value being higher. And I will say, you look at that pork cutout value is now $18 above where it was a year ago at this time. That's a little bit surprising, just given where we sit in terms of slaughter numbers on the hog side of the equation.
I think too, I mean, while that's been the case most of the week, and then we came into yesterday and hams and bellies really shot through the roof, both at midsection yesterday and then at the end of the day as well. So I think they were trying to jockey for top position this week.
Yeah, absolutely. It's just amazing how strong those prices have been, frankly, in the face of what are very large runs of hogs right now.
Speaking of slaughter totals, while we won't take a look at the weekly slaughter totals, we are going to talk a little bit about weekly or slaughter weights, which we do have information on. It's pretty impressive to see the not only amount of slaughter runs, but then the amount of carcass weight as well.
Yeah, for sure. I guess, as we think about where we sit today, and I'll start on the cattle side. So steer dressed weights, latest weekly data we have would have them at about 919 pounds. That compares to about 904 pounds same time a year ago. And yes, they're still running well above year ago levels. However, if we went back into what was early June, where we were running 900 pounds for that carcass in early June for this year, that compares to what was more like 850 a year earlier. So at least the rate of growth is coming closer to where we were a year ago. And on the hog side, overall hog weights about 2 pounds above where they were a year ago at this time. If you remember, in the very early part of recovery of slaughter capacity, we were talking about weights that were 6 pounds higher. So again, we're narrowing back in. Maybe that gives us a little bit of indication that we're getting more current in both of those markets in terms of backed up inventory.
We talked about this during our quarterly market outlook webinar earlier this week. As we talk about these slaughter runs and knowing that there's more pork coming online, we know the supplies of market ready hogs are more than ample. How cautious are we moving into the final quarter of the year, as we know that that's typically a year where shackle space is pressured and slaughter capacity is pushed to the max?
Yeah, so I think, we know we're going to run into some weeks here in the last quarter where we're likely not going to stay as current as we would like to be. I think that maybe the good news is we've gotten more current than we might have anticipated going into the start of the quarter. So from the slowdowns that occurred back when COVID was at its worst in the processing industry. I think we are starting to get caught up from that. So I think it's good news in terms of that, yet we know we're likely going to need really big runs. And I guess it reminds me to say, as the weather gets colder and we spend more times indoors, what's that do to COVID spread? And let's hope we don't have another more serious setback on the processing side. We just can't handle that given the number of hogs we need to slaughter. And if that were to happen, that for sure to me makes the start of 2021 not very enjoyable, because again, we'll have hogs backed up that we need to deal with for a longer period of time.
Really a quiet week in terms of reports. Restaurant Performance Index out this week, and a slight increase from July to August.
Yeah, that's right. You know, when you look at the August numbers, overall restaurant performance index came in at a 97.6. So I'd like to remind us, you know, 100 is the break-even line, if you will. So we're still talking about what's contraction from that restaurant performance index. The rate of contraction is getting better. How's that for the good news? When you look back at April, it was at a 94.9, now sitting at 97.6. We're moving in the right direction. I look at the overall report this time, and I think it's good to talk about why did we get a higher report. All right, so the expectations portion of that index, what people are anticipating moving forward, was up 1.4 points from July to August, while the current situation index, which includes things like same-store sales and customer traffic, was actually down a half a point from July to August. So I think that's a little bit representative of what we've seen as COVID spread was increasing again, and it slowed that interest in dining out experiences, if you will. I think that showed in customer traffic and same-store sales, and that's why we see that number down just a little bit in August.
The other report this week, jobs report, and they kind of tie together as we talk about demand and increasing. As we look at this number, are we starting to maybe see marked improvements when it comes to a slow but steady economic recovery potentially?
So I think the news is good. All right. So number one, we added 661,000 jobs in September. That's good news. And we let the unemployment rate then decline to 7.9%. So all of that's moving in the right direction. For me, this is kind of back to some of the discussion that I think happened early on of what kind of recovery do we get in the economy? Is it V-shaped? Is it U-shaped? Is it, because I think that helps us figure out where meat demand goes as we go into 2021. So adding more jobs, lowering the unemployment rate. You know, if you look at the report BLS gave us today, they made note of job gains in places like leisure and hospitality, retail trade, as some of those areas where we got some gain. I think those are areas that are starting to come back. How quickly we can continue to recover, I think, is the important thing. We've had 5 straight months of declines in unemployment. So again, moving in the right direction after what was a shutdown in the economy that we just really haven't experienced before.
What happens, and I know this is that whole like everybody's crystal ball is cracked or very cloudy, and if we knew for a fact what was going to happen, we'd all be sitting on an island like Eddie Murphy and trading places. But what happens if we see more of a stair step or kind of a up and down zigzag type recovery? While we've seen this decline in unemployment, we're still coming into a winter where we've not had necessarily the same type of COVID pressure. How does that all play into what happens for not only just the full economy, but the ag economy in general, and I think specifically the demand picture for beef and pork?
Yeah, so for me, this is the the big question that to try to answer. I worry with the economic contraction that we've seen, and when you look at things like GDP and the loss of GDP that we've seen this year, that's a big downside risk to meet demand in 2021. However, it's hard to get a good picture on how quickly recovery could happen, and what have folks done with the stimulus that they've seen thus far. So is it a quick recovery? And if so, one could get more optimistic about where we get in early 2021. However, if we, in this last part of 2020, start to see some more serious effects of COVID back on the economy again, that's again that downside risk. I worry about the downside risk there, but a quick recovery gets us something that could be, frankly, fairly exciting in 2021. So I wish I had a good answer to that question, but it's you have to certainly pay attention to what's going on in the general economy. I think that's going to be much of what spells where prices head for both cattle and hogs as we get into early 2021.
We focus primarily on the livestock sector, but that doesn't mean that grains don't play a role in that as well. USDA released quarterly stocks report this week and took a lot of the market by surprise.
Yeah, that's right. You know, I sure hope everybody locked in their feed costs prior to the report. I'm really good at telling you you should have done that after the report came out, but corn futures, for example, have been up about 16, 17 cents so far this week on the news of what was both tighter than expected corn and soybean stocks. So I think, again, taking advantage of opportunities where these prices have been lower to lock in feed costs is not a bad strategy for us on the livestock side. We haven't had to talk about really feed costs for a while. They've been low and near the bottom end for a while, but risk management's both major inputs as well as your output.
All right, Scott, I think that'll do it for us this week in terms of reports. Good to see you early. Have a great weekend. As we look ahead to next week, what are we watching for report-wise?
Yeah, so midweek, we'll actually get another monthly trade data report from ERS, and then we finish the week with USDA's monthly WASDE report.
Sounds great. We will talk to you next Friday.
Very good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And we had some changes, and this has been going on for a couple of weeks. If you don't see it in your email box, make sure and check your spam folder so you're getting all of this great content from Scott. As well as this week, we'll probably include the quarterly market outlook webinar, which we launched earlier this week. So have a great weekend. We will talk to you next Friday. I'm Megan Grebner on Brownfield.